Good afternoon, everyone. Welcome and thank you for attending today's webinar on accessing GCC capital through fund platforms. The purpose of today's session is to provide strategic insights into regulatory frameworks, market opportunities, and operational considerations for international firms looking to establish a foothold in the region. My name is Jack Collins, and I'll be helping in support of today's ceremonies. Today, we'll have two speakers to discuss this topic. It's my pleasure to introduce 𝗟𝗲𝗺𝗺, who's the founder and CEO of the 𝗟𝗲𝗺 Group and 𝗟𝗲𝗺. We're also joined by Dr. Ryan Lamand, the co-founder and CEO of FSRA regulated firm, 𝗟𝗲𝗺 Wealth Management. We'll have an hour for today's session, and the format will run as follows. We'll have introductions from 𝗟𝗏 Capital and 𝗟𝗲𝗺. Dr. Ryan will then discuss fund platforms in the UAE. 𝗟𝗲𝗺 will cover the Kingdom of Saudi Arabia. And following these presentations, we'll have discussion around the GCC fund passporting framework. I'd like to highlight at the end of today's presentation, we'll have a 15-minute question and answer session. So please, I'd like to invite everyone to leave your questions in the chat. There should be a little Q&A section available to you. So please let us know, and our speakers will take your questions. Again, thank you everyone for joining. Really appreciate it. I'll now hand over to 𝗟𝗲𝗺𝗺 and Dr. Ryan. Thank you.
Thank you, Jack. Really appreciate that. If you can move to the next slide. Wonderful. I want to thank everybody again for taking time out of their busy day to join us in this webinar. My name is 𝗟𝗲𝗺𝗺𝗺. I'm the founder and CEO of 𝗟𝗏 & Partners, and the CEO of 𝗟𝗏 Capital, which is our Group Saudi subsidiary, currently licensed by the CMA as an advisory firm and about to secure its license for asset fund management business. We've been in Saudi Arabia for the last 6 years in the frame of a regulatory GRC consulting firm, and helped numerous local and international firms in establishing various businesses that are regulated by the CMA as well as SAMA. That includes asset managers, fund managers, broker-dealers, fintech firms, et cetera, et cetera. So the team in our Saudi office has significant experience in not only dealing with the local setup, with the local cultural nuances, but also dealing with international firms that are looking to establish their business in Saudi Arabia. And our clients have ranged from the very, very large global firms that have entered Saudi market to mid-sized firms to smaller firms. And when I'm talking about numbers, there are firms that are managing somewhere north of $1 trillion, and there are firms that are managing a few billion, and there are firms that are startup. And as I mentioned before, we have been supporting the firms not only in establishing their businesses in Saudi Arabia, but also post-establishment and post-securing the regulatory licenses, supporting with their compliance and AML functions, with their risk management functions, with their finance and bookkeeping functions, et cetera, to help our clients succeed when they set up the business. So with that, I will pass on to Dr. Ryan for an introduction to 𝗟𝗲𝗺 Wealth Management, and also to go over the fund and passporting regime in the UAE.
Thank you very much, 𝗟𝗲𝗺𝗺. Good day to everyone, and thank you for hosting the webinar today. So I'd like to present, first of all, 𝗟𝗲𝗺 Wealth Management Group of companies, which consists today of 3 companies. This venture has started back in 2022, late 2022. The aim was to create a group of companies that cater for the ultra-wealthy family offices, institutional, as well as government. What we do ranges from wealth management to discretionary portfolio management, to advisory, to fund management. Our specialty basically is to creating structures as a service, not only funds, any structure as a service. So we can create a full-fledged family office, top-down, that are operationally efficient, streamlined, tax efficient, succession-proof, etc. In our observation, many of the investors that we see, whether family offices or large individual investors, they know exactly what they want to invest in. Where they need help is how to invest. With the very large number of funds and investment managers coming into the country and the region, financial advice is readily available. However, how to invest, how to efficiently invest and deploy investments is where we add value. Our group of companies is composed of, first of all, New Vision Wealth Management, which is an ADGM FSRA regulated 3C company. It has multiple activities, as you can see on the screen, which ranges from advising on investments to manage and collect investment schemes, etc. So this is where we offer funds as a service, among several other things. The second company is called New Vision, is an investment fund management, and this company is regulated by the Securities and Commodities Authority, the SCA, the federal regulator of the UAE, whereby we offer fund management services, again, funds as a service as well, onshore in the UAE, and I'll explain why once I get to the GCC fund passporting bit. The third company has a different brand. It's called 𝗟𝗲𝗺. It's a Swiss company regulated by FINMA, the Swiss regulator, and this is where we can offer wealth management, advisory, discretionary portfolio management services, client booking out of Switzerland. So Switzerland is one of the most developed countries with regards to wealth management, products, private banking, etc. And having that foothold, that flag in Switzerland is very important. That creates a bridge between the GCC and the biggest wealth management jurisdiction in the world. So this is really, in a very quick helicopter view, the three companies as of today. Next slide, please. So I'm going to start with the UAE. Why the UAE? We get this question quite often. So out of the GCC, why the UAE? The UAE has really started early in becoming on the forefront of reforming the country, reforming its economy, its financial system, by creating financial free zones, bringing the UK common law, etc. So the UAE has become really a strategic global hub. What has been very helpful, its geographic location, whereby it's really at almost equidistance between East and West. So from a geographic location perspective, it's fantastic. This is not only because you can travel easily from and in the UAE to the east or to the west, but also from a timing perspective. The UAE's time zone basically covers 4 hours of the day, whereby international trading, 24-hour trading, has a dip in volumes between east and west. So this is when the day is starting in Asia, or ending in Asia and starting in the West. So it's these 4 critical hours where the UAE has really covered a big gap. Also, the UAE is the host of the largest sovereign wealth fund mass in the world. If you add them all, it's even bigger than Norway's. So institutional investors, whether sovereign or semi-sovereign, are the largest in the world. 3, it's a very business-friendly environment. You have multiple zones to create companies literally in days. It's very friendly to investors. It's very easy to create companies and do business. And today, one of the biggest problems was opening bank accounts. Now it has become very easy. 3, economic diversification and innovation. Both the DIFC and ADGM, as well as onshore, they have places where if you want to create a startup, they offer you the best environment possible to accelerate your company and transform your startup into an established company. And it's a very welcoming environment also to get pre-seed and seed capital because of the previous point, which is the presence of institutional investors who are also venture capital investors. And finally, stability. Investors look for stability. The Middle East has always been known as being a place where, yes, there are wars and where it's instability. The UAE has really transformed this through its economic, military, and political stability, whereby it's as safe as being in any developed country. So it has become really an oasis in the whole Middle East for businesses who are seeking stability. And we're seeing this. The whole world is trying to come to the UAE at the moment and create companies. Next slide, please. So now we get into funds as a service. So funds as a service, to explain it before I get into the diagram. Funds as a service consists of creating a fund that is fully white labeled, fully serviced by us, the fund manager, for a fund sponsor that can be a family office, a foreign fund manager, or any institutionalized investor. So instead of this investor or fund sponsor having to get his or her own license, a 3C license, we do it on their behalf. So this model, which is called ManCo, has existed in Luxembourg for more than 40 years today. Luxembourg has become the largest fund jurisdiction in the whole world using that specific model. So large foreign fund managers, when they want to create a UCITS fund, a UCITS is a retail fund in Europe, they don't go get their own license, create like an office, compliance, risk. They don't create a full setup. They use ManCos to create UCITS. And then that UCITS is passported across all of the EU countries for distribution and raising capital. So this is basically what we do. It's called ManCo services. Now we call it funds as a service because it's a little bit more than just a simple ManCo service. Now there are different models of ManCo or funds as a service companies. The main ones are, the first one is the fully serviced ManCo or funds as a service. So this is a company that offers you a full service from fund management to fund administration to custody to distribution to banking, etc., etc. So there are many advantages to having this as a one-stop shop, and there are drawbacks as well. I'm going to talk about the drawbacks just because I like to hit on competition. So the drawbacks are basically when you take a one-stop shop like this, you're stuck with the whole ecosystem of that ManCo. So if you're not satisfied with a very specific element within that ecosystem, you're basically stuck. The way we offer it, it's an open architecture, which is the second model. We're completely open architecture. We offer fund management, and we deal with a panel of service providers, custodians, fund administrators, auditors, etc. So for each project, we select the best partner or service provider that fits that project. So one shirt does not fit all. One fund administrator could be very good at GPLPs or private equity, and another would be much better for liquid instruments or liquid funds that are high frequency. So this is why we prefer to remain open architecture to select the best service provider for the project. The second reason behind it, if the client is unhappy with one of these service providers, we can very simply replace that service provider and put another one that is more fitting. So that's why we're an open architecture versus closed architecture. The diagram you have in front of you is a typical funds as a service that we create, whereby the investor, the UBO, would be the fund sponsor of the fund or the foundation or the SPV. There would be an investment committee on the board. The investment committee on the board would be 2/3 at least controlled by the fund sponsor. We hold one seat with veto power. Why is veto power very important for us as a fund manager? Because if the fund sponsor would like to invest into something that is against the PPM or prospectus of the fund, or against the laws and regulations of the UE or ADGM or another jurisdiction, then we have the ability to say no. Now, if the fund sponsor would like to take certain risks that are not against the prospectus and the PPM of the fund, then this can be done. And we, as the fund manager, we would look at it, examine it, and proceed with it. Then on the right-hand side, you can see all of the service providers for the fund that we handpick, that we select in a way that is fitting for that project. Then you have either a simple fund, simple segregated fund, or you have a PCC, protected cell company, as you can see below. It can be an incorporated cell company, whereby you have multiple cells. We handle everything with the service providers, from custody to administration to internal audit, risk, compliance, KYC, external audit, and regulatory filing. Next slide, please. So another typical structure that we do at the moment are feeder fund structures. Feeder fund structures are quite important for foreign fund managers who wish to raise money from the UAE. So a foreign fund manager wishing to raise money in the UAE cannot actually do it without registering that fund with a regulator, with the federal regulator mainly. And for that, this fund manager will need basically a fund distributor. And for that, he would be bound, or she would be bound to that fund distributor. So feeder funds allow for more freedom in distribution. So it's a simple fund that invests into a fund that is registered abroad or elsewhere. Next slide, please. Other shapes and forms of funds are private equity funds, GPLPs, where there's a general partner and a limited partner. The fund sponsor can own the GP, but the GP should be under the control of the fund manager to satisfy regulatory requirements. So that's another shape and form of funds that that we can do. Next slide, please. I hand it to you, Jahanzeb. Jahanzeb, go ahead. You're on mute.
Sorry, thank you very much, Dr. An. I really appreciate that. I think it's my time to talk about Saudi Arabia. No conversation is complete without talking about the GCC without having discussed Saudi Arabia. As some of you or most of you may know, Saudi is the largest economy in the MENA region, over $1 trillion in GDP. Everybody has been talking about the largest sort of regional capital market, which is Tadawul. I think the market cap currently is somewhere between $2.7 to $3 trillion. And it's been driven by the Vision 2030 that came out a few years ago. And everybody has seen the number of investment initiatives that have taken place. Some of the larger ones in the financial space are the infrastructure investments that the Saudi government, along with BlackRock, are making. And there are a number of others that are also in place. Sovereign wealth fund, obviously, as you know, PIF is quite a large player. Most recent sort of numbers are somewhere north of 950 billion. And the goals are to make PIF somewhere close to a $2 or $3 trillion sovereign wealth fund by 2035. And obviously, as all of these investments are taking place, there is a lot of demand for how to structure, how to utilize, how to invest, and how to monetize the opportunities both in the private equity space, in the liquid market space, and any other space where there is an opportunity in return that is coming. So it's a very, very attractive market, but it comes with its own challenges, and I will come to those. Next slide, please, Jack. So what are the challenges, right? Most of the times when we are comparing the UAE versus Saudi Arabia is considered to be a lagging in terms of both the infrastructure as well as ease of doing business. However, over the course of the last 3 or 4 years, there has been some significant strides in making things much more smoother than before. I've had the personal experience of going to Saudi Arabia since 2006, and I've seen the transition from how it used to be in 2006 till 2016 or 17 or 18, up until now, which is a marked difference between how things used to be done and how things are done now. However, there is still a little bit of a challenge that needs to be overcome as the country is looking to further align its regulatory infrastructure, its political priorities, and its sort of economic priorities. One of the reasons that you will notice that doing business in Saudi Arabia is probably more expensive than operating in the UAE. The local market knowledge is not as prevalent as you would see in the UAE. There is some regulatory complexity. However, I would challenge that this probably is a little bit less than in the UAE, because in Saudi Arabia, you only have one capital markets regulator and one banking regulator. However, in the UAE, you have a number of regulators regulating different jurisdictions, which creates some complexity. The process is time-consuming, definitely. How much more? It really depends on the complexity of the request. But I would say somewhere between 10 to 20% longer than what you would have generally in the UAE. There are now marketing and promotion barriers. The Capital Market Authority is now very keenly looking at who is doing what business in Saudi Arabia and by what means. And a number of managers or financial services firms that are looking to raise capital in Saudi Arabia are being requested to put a presence, a substantial presence in Saudi Arabia to avail those investments that they are seeking either from the PIF or SAMA or other Saudi government entities. Investor trust and access. Saudi is still a very interesting market. And if you understand the GCC, it's driven by trust and relationships. And in order to access capital, it is very important to have members on your team that have the trust of the potential investors that you're looking to see. Next slide, please. What can we offer as a hosting solution similar to what Dr. Ryan and NeoVision Wealth Management is offering? We are also offering a open architecture platform where for international firms as well as for regional managers or even emerging managers locally, you have an opportunity to utilize the regulatory infrastructure of J1 Capital. What does it do for you? It's basically much easier market entry. You don't have to go through the CMA licensing process. You would not have to go through the waiting process, obviously, that comes along with the licensing elements. And if you have opportunities that you want to commercialize, you can do those much faster than if you were to go through your own process. As I mentioned in my opening remarks, obviously J1 Capital has been operating in Saudi Arabia for a number of years and has assisted a number of firms in establishing their regulatory presence in the country. So we fully understand what is required to set up a fund, set up a much more complex infrastructure for various types of clients. And then we have the team available to provide the regulatory support from compliance and AML to risk management to regulatory finance to corporate setup and so on and so forth. In addition to that, we have a large local network. We hosted a financial services forum last year, which was our first. We'll be hosting a second one this year, which invites the senior leadership from the industry as well as the CMA and TDAWL to talk about key elements in Saudi Arabia and how we can help further progress the Vision 2030 and the different sort of elements that the regulators, the exchange, and the participants play. So that has been quite successful. And on top of that, obviously, you will need some operational support when you want to execute. So we provide full operational support. And again, going back to the initial comment, it's an open architecture. We believe in the fact that different problems require different solutions, and an open architecture allows our clients to avail the best fit that is for them. And this is where the discovery element that we go through with our clients plays a key role. Next slide, please. Okay, so customizable structures. Again, the KSA fund structure setup is a little bit more unique than what you would find in the DIFC or the ADGM. The fund is a contractual arrangement between the fund manager and the investors. Typically, you can set up an SPV in the middle for ownership, protection, and some other legal considerations. However, CMA requires the fund manager to appoint an independent custodian, which comes out of the structuring that I discussed earlier, which is a contractual arrangement to make sure that the assets of the investors are protected. And sometimes the custodian also acts as the administrator, or we can appoint a separate administrator depending on the type of the fund. So together with our service providers, we provide the custody, administration, audit, risk, compliance, finance, and regulatory filing support. So if you are an international firm that is looking to set up a structure in Saudi Arabia, be it a feeder structure or a local fund or some other type of structures, we are able to provide that support. Jack, next slide, please. Okay, some of the asset classes and the fund types that we cover and the structures. We cover equity, fixed income, alternatives, commodities, other non-real estate funds. We are not licensed to host real estate funds at this point, but every other type of fund we can. Obviously, the fund types are private and public funds, open-ended, closed-ended, and the structure can be master feeder, fund-of-fund structures. And in addition to that, we can host separately managed accounts. So if you have a large mandate from a significant player who does not want to structure the investment as a fund, we are also able to provide separately managed accounts that you can manage through our platform. Next slide, please. And I'm not going to go into too much of a detail about the fund setup process. As I've mentioned, there's an initial discovery phase in which we understand what is required, what are your commercial objectives, what type of fund structure that you will need, and what HR support, if any, required, and then execution of the various agreements. Pre-implementation process is, again, as I mentioned, there's open architecture. So based on the discovery phase, we determine which of the service providers we need to engage for you, depending on the fund structure, legal advisors, etc. We will obviously create all of the documentation that you need to provide to the CMA, subject to obviously your approval. And once all of that is done, then the execution phase starts. We submit the documentation to the CMA. Once we get the CMA approval, then we can help you potentially create the marketing materials and market the fund. In relation to ongoing oversight, we as a fund manager are responsible for making sure that everything that the CMA expects is done. And that's where our engagement with our client comes in terms of who does what. And we want to make sure that everything is very clear. One of the other things that we do is that we have our own technology that we use for ensuring that the engagement with our clients is robust, and that the periodic reporting, notification, everything else is managed through the technology platform that we provide, which is created by our own technology company. In addition to that, if there's any other elements around tax, regulatory filings, reviews, etc., our specialist teams will work with our clients to make sure everything is understood correctly and then gets executed on time. Next slide, please. I apologize for the sales pitch here. What's our advantage? Our expertise and track record. Obviously, our relationship with all of the service providers. We have a variety of service providers that we deal with. Most importantly, our regulatory expertise and strong relationship with the regulators. The regulators have known us for quite a long time, and if I may say, we are probably one of the larger ones in Saudi Arabia when it comes to CMA-related matters and SAMA-related matters. And then we provide ongoing compliance and operational support. And we utilize the expertise of our team across the group, not only in J1 Capital. So we not only benefit from the local team in Saudi Arabia, but quite a large international team that's based in the UAE and outside in other locations. Next slide, please. Okay, over to you, Dr. Ryan.
Thank you, Jahanzeb. So regarding UAE and GCC fund passporting, the first fund passporting was created here in the UAE, whereby if you create a fund in one of the three financial jurisdictions of the UAE, DIFC, ADGM, or onshore UAE under ESCA, you can passport that fund across these three jurisdictions, just like you would do in Europe with the UCITS fund. So one fund can be distributed across the other jurisdictions. Now, since 2014, the GCC has been working on a GCC-wide fund passporting, very similar to Europe's UCITS fund passporting, whereby if you create a fund in one GCC country, you could passport it and sell it across the 7 GCC countries. So this GCC fund passporting was announced back in November 2024. So you can go to ESCA's website and read about it. You can simply go on Google and type GCC fund passporting, and you'll find the article that was published on ESCA's website, the federal regulator, and multiple other law firms that have written about it. Now, this GCC fund passporting, as of today, as we know, this is our information, this does not include 𝗟𝗏𝗺, ADGM, and 𝗄𝗏C, Qatar Financial Center, until King Abdullah Financial District is ready, whereby the 4 financial free zones of the GCC will all be included in that GCC passporting. So as of today, according to our knowledge, as of today, if you create a fund in either 𝗟𝗏𝗺 or ADGM, you cannot yet passport it across the GCC. However, if you do it under 𝗏𝗂, this is when you can basically passport it across the GCC. And that's one of the reasons why we have our own separate company that is licensed by 𝗏𝗂 to do funds onshore in the UAE. And the final conclusion that I'd like to make regarding selecting a jurisdiction and type of funds as a service or ManCo service provider. The first thing you need to determine is what type of clients you want to target. If you're targeting retail clients, our advice is to go for a fund onshore under 𝗏𝗂 and not in ADGM or 𝗟𝗏𝗺. ADGM and 𝗟𝗏𝗺 are fantastic for professional qualified investor funds or exempt funds directed towards professional clients, but it's not really for retail clients because, as you know, both 𝗟𝗏𝗺 and ADGM are not jurisdictions that have retail mass. So creating a fund under 𝗏𝗂 would be better to target retail investor. The second criteria is if you want to do it in one of the 2 financial centers, 𝗟𝗏𝗺 or ADGM, you have to consider multiple things: the ecosystem, whether it's UK common law, direct application or not, the investors you want to target. And finally, and most importantly, when you're selecting a ManCo or funds as a service, do you go with the closed architecture one, whereby you're stuck with the whole ecosystem, or do you choose an open architecture where you can put and remove any service provider you don't like? And finally, do you go for a sell in an ICC, in an incorporated cell company or protected cell company, or do you create your own standalone fund? We ourselves don't do cells in an ICC. The reason is very simple. In an ICC, you cannot white label the cell you create under that ICC. So the ICC has a very specific naming methodology, whereby if you create a cell under an existing ICC of a ManCo or funds as a service provider, you have to stick with the name they will give you, which is the name of the ICC. So white labeling and branding would not be there. The second reason is if you have a cell in an ICC and the 3rd or 4th cell for some fund sponsor or foreign fund manager, for any reason, collapses or blows up or whatever, something happens to it that is reputational. So despite the cell that you are in is segregated, ring fence from a legal perspective, but from a reputational perspective, this is not very pleasant that you are in an ICC where one of the cells has issues. Again, goes back to branding and white labeling. So that is why what we do is completely segregated, standalones, ICCs, PCCs, funds, Sharia compliant funds, GPLPs, feeder funds, but they're all standalone that are fully white labeled. You choose the branding, you choose the marketing strategy, and we adapt the fund to that strategy. So selection is very, very important to avoid regrets later on. So that's all from my side. Jahanzeb?
Thank you, Dr. Ryan. I think I want to add a couple of points to your closing remarks. The obvious question that the audience may be asking is, what's the difference in terms of cost of going with a closed architecture versus an open architecture? And generally, what we've seen is that the cost structures are very similar. It all based on quality of the provider and what infrastructure they're providing. So obviously, if you are, for lack of a better example, if you're looking for a Camry, you should not go to the Mercedes showroom. And if you're looking for a Mercedes, you should not go to a Camry showroom, simply because both of them do the same thing, but the ride is going to be very different. So the idea would be to select, as Dr. Ryan said, on a number of criteria, including cost, but not just purely cost. And this applies more to emerging managers than to more established international firms that are coming to the region. Secondly, I think it's very, very important to also understand fully the regulatory environment and how it is changing, particularly in light of the UAE or the GCC passporting regime that will be coming in. It is important to understand, as Dr. Ryan said, where your investors are located, and potentially look out 2 or 3 years in terms of your ideal scenario, and how that will play out for you if you are successful. The way the region is going, the chances of success are higher generally than other places. And if you plan only for the first 12 months, then the infrastructure, especially in a closed architecture setup, may not support your future plans. So it's very, very important to plan for at least 3 years when you're setting that up, because capital raising also takes time. Even if you have checks ready, even those checks will take 3, 4, 5, 6 months to come through. So that will be our position on this. And with that, I think we can open it up for questions. Jack, do we have any questions from?
I answered lots of the questions in typing, so they are unanswered. I can read them if you want and go through them very quickly.
Sure.
So the first question, how are the various fund structures modified to address the needs of Sharia investors in non-GCC real estate? Yes, I confirm we can create Sharia compliant structures that invest in non-GCC countries. Yes, this is possible. Could you please touch on GCC fund passporting? This is done. Do you provide assistance with KYC? Absolutely. This is part of the service that is done. And just a reminder, 𝗟𝗲𝗺 is a company that provides compliance, KYC, and in my opinion, it's the best in doing so. When you say non-real estate, does that mean debt secured by real estate as well as when it comes to fund structure? You don't cover. So
I think this was meant for me, Dr. Ryan.
Please go ahead.
Yeah, so the real estate funds in Saudi Arabia particularly are a special breed of funds that the CMA wants to closely protect, because typically these are infrastructure related funds where you buy some land and develop some land and so on and so forth. And for that, they require a license that is referred to as managing investments and operating funds, because they want the real estate fund managers to also operate the fund, which is more akin to an administration type function, and so on. So that is the reason why we have chosen not to pursue the license for supporting real estate fund setups, as typically these are very, very large funds and are sponsored through sort of the larger institutions already, and we didn't see the commercial value in doing that.
Thank you, 𝗟𝗲𝗺. The next question is, what is the cost to set up a fund under 𝗥𝘆𝗃? So this you need to get in touch, and we see the project, and we can give you a code. The second part of the question, enabling us to passport across the GCC. Is it more cost effective to register a foreign fund with the local promoter? So that's a very good question. If you want to do GCC passporting, you'll have to go register that fund in each country with fund promoters. You cannot passport the fund. Only UAE under 𝗥𝘆𝗃 funds can be passported. So you need to create either a feeder fund that feeds into a foreign fund that you have, or create a fresh new fund under 𝗥𝘆𝗃 to GCC passport the fund. And yes, it is much more cost effective, much more practical, because you're not bound to a local promoter when you want to promote the fund. So just to reconfirm, GCC passport will not be applicable to DFC, ADGM, etc. So yes, as of today, our information, ADGM, DFC, and QFC, Qatar Financial Center, are not included in the GCC passporting. Only federal regulator of the UAE under 𝗥𝘆𝗃 is included. So it's only the main regulators in the GCC where GCC passporting is applicable. We do believe that it will be ready in 2026 when King Abdullah Financial District will be ready. And then we have a question to share the deck. Well, you can email the organizers and we can share the deck. There are more questions. Do you help? That's a very good question. Do you help with raising funds from institutions? So no, we don't raise funds. We don't help raising capital. However, we can introduce specialized firms who do that, again, because we are open architecture. There are various firms that help capital raising, so we can introduce you and then you can take your pick.
Yeah, if I want to add, actually, so in Saudi Arabia, we can potentially assist, but on a very selective basis in terms of capital raising. But we can discuss that separately. If you're interested in that service, please reach out to us. We'll be more than happy to share that. But this is not a service that we offer for every single fund that we bring onto the platform.
The next question is offering funds open-ended, mainly investing into public equities, into US as well as UK European residents. Yes, it is possible. This is possible. So you do not service real estate fund managers. In the UAE, yes, we can do real estate and real estate fund management. This is possible in the UAE. In Saudi Arabia, as mentioned by Jahanzeb, it's a bit trickier. Can you share experience in setting up crowdfunding platform licensed under CMA for real estate debt and KSA? So this I invite you
I can
to...
answer that question if you allow
yes.
me, Dr. Ryan.
Yeah.
Yes, I mean, real estate crowdfunding platforms are possible. Generally, the license that you will need for that will be an arranging license from the CMA. Some firms have gone onto the fintech sandbox to basically get their business model validated by the CMA, and then they have graduated over to the full license, which is the arranging license from the CMA. But it's very much possible. There are private credit funds in Saudi Arabia. There's a private credit fund regime in Saudi Arabia that if you want to raise financing, you are able to set up private credit funds, and we are able to do that as well through our fund platform.
Final question that I have here, can we get set up prior to having funds ready? It depends what kind of setup you want to do. If you want to get your own license, for example, a Category 4 advisory, then you need to speak with Jahanzeb or Jay. I want to get so you can get help to get the license. If you do not want to get your license, you just want to have a fund, again, you need to get in touch and we need to see the project and see how. Next question, can you please re-explain how the Manco and funds as a service structure works? So very quickly, so we have a fund management license. We're licensed to create and manage funds. So we do it for a fund sponsor. That fund sponsor would be the entity that wishes to deploy investments for LPs or for themselves if it's a family office. So we as a fund manager, we basically devise the investment strategy with the fund sponsor. So we do the fund management or investment strategy that the fund sponsor wants, okay? This is how it works. The fund would be under the responsibility of the fund manager at all times. So if there's a mistake, it is on the fund manager to assume that mistake and make sure mistakes do not happen, basically, in the first place. So it's sort of think of it as a plug and play solution whereby we can do a fund without you having to get your own license. And if one day you wish to get your own license, then that fund can be managed by you.
Okay, I think there's one question around, just to clarify, for an ADGM fund, what type of Saudi investors are eligible to invest? So if you are approaching investors in Saudi Arabia from the ADGM, technically, as you would expect, because of no passporting, technically that's not possible or under the regulations. Now, if there's reverse solicitation from investors in Saudi Arabia, then that's perfectly fine. CMA has exempted PIF and some of its entities from being subject to securities regulations in Saudi Arabia, similar to what SAMA and the government would fall under. So if you're reaching out to PIF and PIF's related entities, then securities business regulations generally do not apply. But if you are reaching out to smaller corporates, privately owned corporates or family offices, then it is better to go through a CMA regulated firms unless and until you have unsolicited requests from those investors.
Okay,
okay,
next question.
I think we have...
Yeah, go ahead, Jahanzeb.
Okay, perfect. So the last question is, where can the exempt institution list be found? It's in the securities business regulations, which you can find on the CMA's portal under implementing regulations. The CMA circular that exempts the PIF entities will not be available there. It was sent privately to a number of regulated firms, but that is something that we can confirm to you here that that is definitely the case.
But there's one question again about passporting. If it's going to be available under 𝗥𝘄𝗃, I confirm it is available under 𝗥𝘄𝗃 as of today. So GCC passporting is available under 𝗥𝘄𝗃.
I think one point I want to mention here, it's very important. Although the GCC passporting law has been put in place, the actual operational elements are still being discussed between the regulators. So when we speak with 𝗥𝘄𝗃 or with the CMA in Saudi or the CMA in Kuwait or the Qatari authorities, all of these are being discussed. And what is to be seen is effectively what operational elements will be required from a fund located in one jurisdiction going into the other jurisdiction. So those are the key elements we will have to wait for. But at this point, there's no clarity, except for what Dr. Ryan has mentioned, that neither QFC nor DIFC or ADGM funds will be eligible for passporting.
So there's a question on crypto and tokenization. This is a very important question. Yes, we can do them in ADGM, onshore as well in a different form. But in ADGM, we today have the first and only, to our knowledge, tokenized fund in the whole Middle East. To our knowledge, we have not found any other tokenized fund in the whole Middle East. The way we've done it is tokenization is embedded in the articles of association of the fund. So the fund does not issue units and we tokenize the units. The fund actually issues tokens because tokenization is embedded in the articles. So yes, it is possible to do crypto funds and tokenized funds in ADGM as of today. And we've done it before.
And just to put a comment on Saudi Arabia, in Saudi Arabia, crypto is not currently regulated. Tokenization, however, is very much possible and subject to discussions with the CMA. And this is where the FinTech Lab comes in. So if there are any tokenization, real estate tokenization, or any of the tokenization elements that you want to discuss, then CMA will be open to discussing that. And I think these are
consulting. Yes. So yes, we can offer
on
consulting
both
services
fronts.
of all kinds. Both of our companies can offer that. We complement each other. So the consulting services we offer complement what JN1 partners offer and vice versa. So you need to get in touch with either of us. And if we can do it, we do it. Otherwise, we refer you to JN1 and partners.
Okay. I think we are over time now, are we? Or are we still in time?
We are 5:17, 2 minutes above time, but yeah.
Unless there are any other questions, we can definitely close the session. Okay, I think I want to thank everybody for attending the session today. Hopefully this was useful. If you need a presentation to be shared with you, please reach out to the organizers and we will share those with you. And from us, thank you again for spending your valuable time with us.
Thank you all for attending.
And